and the candle patterns. So let me show you some pattern in the market. So as you all know, this is the bearish engulfing pattern, right? So what is this mean? It mean the sellers are in power. You can see they engulf the buyers here. You can see the seller's body engulf the buyer's body. So it means the sellers are more stronger than the buyers in the market, and it means the market wanna go down. But this is a forex pattern, so we cannot trust this directly in the binary. So we should know this is a forex pattern, and we cannot trust this in binary because sometimes it will work, but sometimes it may not work. But I just want to show you. And here you can see this is a bullish engulfing, this is a bearish engulfing, and this is a bullish engulfing. You can see this bullish engulf this seller's body, and it means the buyers are more stronger than the sellers here, and the market may go up. But it is a forex pattern, so we may get a retracement candle, and it may not work directly. So we may see a retracement candle. Sometimes it will work, sometimes it will not work, because it is not for binary. So let me show you some example. Okay, here you can see a bearish engulfing, right? But here, as you can see, it didn't work here. Again, a buyer's entry after this. Here you can see a bullish engulfing, right? Here again it didn't work, and you can find the example here. You can see a bearish engulfing, it didn't work. Bullish engulfing, it didn't work. Here again a bullish engulfing, it didn't work. So sometimes it may work, sometimes it may not work. Why? Because it is a forex pattern, so we cannot trust this directly in the binary. But we can avoid this retracement candle in some condition, like here. Here you can see there is a bearish momentum, right? And you are seeing a bullish engulfing. So here it will not work, as I told you, because of this strong sellers, this momentum, the bearish momentum, the engulfing here, it will not work. A single candle cannot work here, cannot stop this strong sellers movement. So a single candle cannot stop this. So engulfing here, it will not work. So at this condition, engulfing, it will not work. And you can see again a seller's entry, and also in bullish, momentum. So you are seeing a bullish momentum, and you are seeing a engulfing. So this will not work, and you can expect again a retracement candle here. Okay, because of these strong buyers at the market, this engulfing cannot work, and we can expect again a retracement candle. At least for 1 minute the buyers will enter, and here also for bearish momentum. So you can see here this engulfing will not work, and it is a forex pattern, so you cannot use it in binary properly. And also we have another pattern. It is also a forex pattern, so let me show you. Okay, Okay, as you can see here, this is a evening star pattern, right? This is a evening star pattern, and here also. So let me draw it with a doji. So it can be a doji and it can be a spinning top candle. So here it can be a doji or it can be a spinning top candle. Okay, so this one also. So this is a morning star pattern and this is a evening star pattern, right? These two also, these are the forex pattern. So after this pattern you can expect a retracement candle. So here after this pattern you can expect a retracement candle like this, and also after this pattern you can expect a retracement candle like this. So after this pattern, the morning star and the evening star, you can expect a retracement candle, and if this one be weak the market will go up, and if this be a strong retracement candle the market again can continue. And here also, if this one be weak the market may go down, but if this one be a strong candle the market again can continue. So these are the forex pattern, but here we have some pattern that we can use in binary also, and those pattern will work very good. So let me show you. Okay, the first pattern is double bottom pattern or the W pattern. You can see this is looking like a W. So what is this? Let me show you in the candle also. If a candle close at a support level, right? This is a support level and we are seeing a reversal, right? And again also the sellers again try to break this level and again they close here, and you again see a buyer's entry from this level, this support level. So here you can see this is a double bottom pattern here. So again here the buyers can continue and the buyers will enter here. So here you can expect a buyer's entry because of this double bottom pattern here. So after this candle you can expect a buyer's entry and the buyers will enter after this candle here. So you can place a higher option here because of the double bottom pattern. And also we have the double top pattern. So what is that? You can see here. So this is the double top pattern or the M pattern. You can see it is looking like a M. So let me show you clearly this one. So if the market is going up like this and the market close here, so you can see a seller's entry here, and again the market try to go up here, but again you are seeing a seller's entry. So this is the double top pattern, and after this candle you can expect again a seller's entry because of this pattern, this double top pattern here. So after this candle you can go with the sellers confidently because of the pattern, the double top pattern. I will also show you some examples, so don't worry I just want to explain first, and I will show you some example also. So the double bottom pattern and the double top pattern, W or M. Another pattern that we can use in binary, it called head and shoulder. So what is that? Let me draw. Okay, so here you can see this is the head, and this is the first shoulder, and this is the second shoulder. So you will see a market moving like this. Let me show you. So the market is going up here, and you are seeing a reversal. Okay, and again the market go up here. I will draw like this to be more fast. Again market go up, cross this level, and again it come back here, and again it try to go up. So it is like this. Right, it is like this, the head and shoulder. So again it trying to go up here, and the market close here at this level that we already see some sellers. So here, because of the head and shoulder pattern, we can expect again a seller's entry here when the market close at this level. So we can go with the sellers here because of head and shoulder pattern. So it is looking like this. This is the head, this is the first shoulder, and when the market close here at this level, you can expect again a seller's entry because of this pattern here. So this is the head and shoulder pattern, and you can use this also, it will help you. So another pattern that we can use, it is the pattern that the market will make in uptrend. We already know the uptrend movement. And also let me explain about the higher high and the lower low. So here you can see this is a high, right? This is a high, and this is a low, right? Here you can see, if we see this high, we can tell this high is higher than this high, right? This is a high, and this is higher than this one, right? This one is higher than this. So we call this higher high because it is higher than this high. So we call this higher high. And this one, it is higher than this low, right? So we call this higher low. Again you can see it is higher than this low, so we call this higher low. And this one is higher than this high, so we can call this higher high. So in an uptrend, you can see the market is making a higher high. You can see here. So in an uptrend, the market will make higher high, and when it stopped to making higher high like this, you can see it reverse here. It's supposed to go like this. It's supposed to go like this, make a higher high and continue. But here, instead of the higher high, it didn't make a higher high. This is the last high, and you can see the market is moving like this again. So it means the market is changing the direction, and it will complete the uptrend, and it will convert to the downtrend. So this is about the higher high and how to understand when the market is changing the direction. And also we can use a downtrend pattern. So here, let me show you. You can see this is a low, right? This is a low in the market, and this one is lower than this low, so we call this lower low. And Here also it is lower than this low, so it is a lower low, right? And this is a high, right? It is lower than this high, so we call this lower high. And it is lower than this high, so we call this lower high, right? So in a downtrend, the market is making lower low. You can see here, in a downtrend the market will make lower low, and when it stops to make a lower low like this, again it go up. So here it will change the direction to go up like this and making higher high, because it didn't respect this movement. It must go down and make a lower low and again continue, but it didn't respect. You can see here, you can see this one is not lower than this, so the market changed the direction here and it wanna change to a uptrend. Okay, so what is this movement telling us? As I told you, it is telling us the market will not respect this previous support here, this one, this one. You can see the market will not respect. You can see it continuously broke, and in uptrend also the market will not respect this previous resistance. You can see it broke here also. So these patterns will help you so much in the market. Let me repeat again. So we know the double bottom pattern, right? And this is a double top pattern or M pattern, and it is the W pattern. We know the uptrend market movement, we know the downtrend market movement, and we know the head and shoulder pattern. So these patterns are so much helpful in the market, and this will help you to predict the market right. So let me show you some example about this. Okay, so here as you can see, we have the evening star pattern here. So, and here also a evening star pattern, and here also a morning star pattern. So as I told you, mostly we can expect a retracement after this pattern. Here you can see this one, a evening star pattern, right? So after this candle you can see a retracement candle here, this one. This is this one called retracement candle. You can see here the buyers again enter at least for 1 minute here, so it is a retracement candle. And you can see here the market reverse after this pattern, and here also you can see again a evening star pattern, and after this candle you can see a retracement candle, but here a morning star pattern, but the market continue to go up. So mostly you can expect a retracement candle, but sometimes it will also continue. So it will continue because these are the forex pattern, right? The engulfing and this one. So these are the forex, so we cannot trust properly in the binary, because we are trading in 1 minute, but they trade for 1 hour or 1 day, but we just trade in 1 minute, so we cannot trust this pattern properly. Mostly it have a retracement candle, this pattern, the morning star and the evening star. Mostly it have a retracement candle. You can see here 2 times it have a retracement, but sometimes you cannot find the retracement candle like this. Okay, so you should know this. So let me show you the next picture. Okay, here I show you the uptrend pattern. Okay, so As we know, the market in uptrend is moving like this, right? So this is the market movement in uptrend. It is making higher highs, as we know, and you can see here it is making higher high. So the market is making higher high here, and from this pattern we can understand that the market will not respect the previous resistance. Here you can see it easily broke this level, and here also it broke this level here. So we cannot trust the previous resistance because the market will broke them easily. So that's why this pattern is important, because sometimes you may see also a reversal candle here, but the market will continue to go up. It will not reverse. Why? Because this is not the actual level. The actual level here will be a trend line, okay, like this. So the market will move in the channel, okay. So that's why I showed this pattern here, because sometimes the people will mistake. Here at this level they are seeing a reversal candle and they think this is a reversal candle and the market will reverse again, but because of market movement it will easily break the level. So that's why I show you this one. In a downtrend also you can see the market will not respect the support level, the previous support level, and you can see it is breaking easily. So always observe this point also. Okay, and here the market movement, here you can see it is making higher high, right? It is making higher high, then it makes some consolidation, and here you can see instead of this movement, instead of this one making higher high, you can see the market is changing the direction. Here it didn't make a higher high, right? You can see this is the higher high, the previous higher high, and the market reverse here. It didn't make a higher high, and you can see then it is making lower low. So the market is changing to downtrend from this level. So here it is changing, converting to a downtrend. So you should observe this one also. So when the market stop making higher high and it move like this, so it will change the direction of the trend here and it will be a downtrend. So always keep this in mind. Okay, here this is a double top pattern or a M pattern. As I told you, you can see the market reverse here, again they come, and again you are seeing a bearish candle here. So it is a M pattern. So you can expect a seller's entry here, and you can see here you can go with the sellers here, and you can see a seller's entry here. So this is a M pattern. You can see the market is going down after this one. You can see here, you can see here it is going down. So this is the M pattern, and it is also work good. And here also we have a double bottom pattern or the W pattern. You can see the market try here, but a buyer's entry here. Again it try, again a buyer's entry. So here we can go with the buyers. Why? Because of the W pattern, double bottom pattern. So we can go with the buyers, and you can see here a buyer's entry very strongly. So you can go with the buyers after this pattern. Okay, this one is a head and shoulder pattern, as I told you. Okay, so this is the head, this is the first shoulder, and this is a second shoulder. So here you can see the market close here, close at this level, that we are seeing the first shoulder right here. So the market close here, so here you can expect a seller's entry. So here you can expect a head and shoulder pattern. So we can go with the sellers here and place a lower option here at this level, because we are seeing the first shoulder here, the head, and again we can expect the second shoulder and the market move like this. So this is the head and shoulder pattern. So you can expect a seller's entry from this level again, because it will make the second shoulder like this. So this is the level. You can see this is the first shoulder, and again this is the head, and again here we can expect a second shoulder. So it will make a head and shoulder pattern here. So this pattern also will work in a binary. And let me tell you a point here. When the market is reversing in the middle, okay, like this, you can see this is in the middle of the trend here. This one, you can see this is in the middle of this trend, right? You can see here. So when the market is reversing in the middle of the trend, like here, you can see it reverses in the middle of the trend. So you can see this trend start here and end here, and it is in the middle of this trend, right? So when it reverses in the middle of the trend like this, and you are seeing a buyer's entry, wait for another buyer's entry, and here you can go with the buyers confidently. So this is a point that will help you so much in trading. So I will repeat again. When the market reverses in the middle of the trend, you are seeing a buyer's entry, wait for another bullish candle. So wait for this candle, and then here you can go with the buyers confidently, and you can see how the buyers enter confidently after this candle. You can see this strongest of the buyers. So you can expect a buyer's entry here after this candle, and you can go with the buyers here confidently. So always remember this point also, and it will help you so much in a downtrend also. When it reverses in the middle of the trend and you are seeing a sellers, wait for another seller's entry, and again you can go with the sellers confidently. So in the downtrend it is opposite of this, and you can use this point. Okay, and another point that I wanna mention, the two rejection in the market is important. Two strong rejection, like here you can see the first one and the second one. So two strong rejection is important, and you can see I use this point and I go with the sellers here. So the two rejection, strong rejection, are important in the market, but the second strong rejection, it will also work? No, it is risky. When we are seeing the three strong rejection here after this candle here, the buyers may enter also. So two strong rejection, the sellers will continue mostly if there is no level here. We can see the next level is here. So always you should observe the levels. Don't forget about the external levels, about the price action. So here you can see there is no level here, so I confidently go with the sellers here. But when you are seeing the third rejection, three strong rejection, here we cannot trust this point. The buyers may enter also. So always check the two strong rejection. Okay, two strong rejection is important. You can see here 1, 2, and I go with the sellers because there is no level. The next level is here, so always check the levels also. Okay, so let me show you some example and you will understand more about this. Okay. So on this video I want to show you this point. Here you can see the market is going down, right? Here you can see the market movement. It is looking like a downtrend, right? You can see here it is making low and low, right? It is making low and low. It means that I told you it will not respect this horizontal previous support. It will respect this trend line. Okay, so as I already told you, in a trendy market, the market will broke the previous horizontal support or resistance and it will respect this trend line. Okay, so the market will broke easily this horizontal level. You can see here also, you can see it broke, it will broke when the market come here, and the market will respect this one. You can see it respecting this entry point, this trend line. Okay, so observe this one and let me show you. Okay, here you can see. Okay, so here some people may make a mistake here. So the market closed at the level, right? And they are seeing a buyer's entry from this level, buyer's momentum, bullish momentum, and they may think the buyers again will enter from this level because the market closed at the level. So they may place a higher option, but it is wrong. Why? Because of the downtrend pattern. As I told you, it will move like this. It will not respect the previous levels. It will break this level easily. So don't make this mistake. As you see, I place a lower option here, not a higher option, because I know the market is moving like this. See, the market is moving like this, so it will not respect this level, this horizontal level. It will break this level easily because of downtrend pattern. You can see downtrend movement. So as you can see, again a seller's entry. So placing a higher option here at this area is wrong. It is wrong. Why? Because the market is not in ranging. It is not a ranging market like this. It is a trendy market. So the market is moving. The market is moving like this. Okay, so the market will not respect this level. You can see it is breaking this level easily. So I use this point and you can see here. Okay, let me show you the next trade. Okay, so here let me show you. Here you can see there is a level here, right? There is a level here. It is a strong level. Why? Because it stopped this bullish momentum and you can see two strong sellers from this level. So it is a strong level. Here you can see the market reject this candle and again a seller's entry with a new low. Here I already draw the next buyers are here. I already draw this one. Okay, so we know the buyers will enter from this trend line here, and the market is coming from this resistance. You can see here it touched this level here and it is coming from this resistance. So these strong sellers are here and we know the level is strong and the candle is coming from this resistance and it made a new low here. You can see a strong candle from a strong resistance. It made a new low. The next buyers are here. So here we can go with the sellers here because you can see here it is visible here clearly. You can see it touched the level. It is coming from a strong resistance and it made a new low here. You can see this one. It is a new low. So we can go with the sellers because of this gap. You can see there is a gap to the next level and this trend line is next level. So that's why I place here a lower option, and you can see it continue to the next level. The next level is trend line, right? And you can see it continue to the next level, and it was a win. Okay, let me show you the next trade. Okay, here I use this point. 70% of the breakout are fake, as we all know, right? So 70% of the breakout are fake, and here you can see the market broke this level. You can see this minor breakout here, it broke the level, and after the breakout I'm seeing a strong rejection here. What's the rejection telling us? It is telling us that the buyers are interested here. So the market broke the level. We know 70% of the breakout are fake, and the market after the breakout will reverse. And I am seeing a buyers entry here, a rejection. That means the buyers are interested after the breakout. So here I go with the buyers, but I got a confirmation here. You can see this one. This is a confirmation, a rejection. So I got this confirmation, and with this reason I go with the buyers. So 70% of the breakouts are fake, and you can see again a strong buyers entry after the breakout, because 70% of the breakouts are fake. So you should keep these points in your mind. And here you can see I directly going with the buyers because of it reverse in the middle of the trend. So it reverse in the middle of the trend. It means the buyers are interested to continue to go up. That's why I go with the buyers. You can see because of this pattern here, because of this one, and it reverse in the middle of this trend. You can see this trend, and it is in the middle. You can see it reverse in the middle, so it will again go up. And here I was thinking about that point I told you. Now when the market reverse in the middle, wait for another bullish and go with the buyers, right? We already talked about it. But here you can see this is very weak candle, and there is a round number here. So as I told you, the SNL level are so important. You can see this one here. This is a round number here, and this is a very weak candle at this round number, so the sellers may enter also. So we cannot trust and directly place a hard option here. It is wrong. You can see I was thinking to go again with the buyers, but here you can see I saw this round number and this weak candle at the round number, so I avoid this trade here. You can see I simply avoid it. Why you risk your money when you are not sure? So always keep these points in your mind, and these points will help you so much in trading. Okay, and here as you can see I placed a lower option. Why? Because first the market movement is this, right? So we already know the market is moving like this, and I saw a reversal candle at the level. We already know this candle, it is a hammer, right? A red hammer at the level is a reversal sign. So a reversal sign at the level, so I placed the lower option here. So you can see this is also a win. So always keep these points in your mind, and these points will help you. So let me show you some more example. Okay, so here let me tell you something. As I told you, 70% of the breakouts are fake, and we can expect the sellers entry, right? Okay, but here you can see I placed a higher option. Why? Let me show you. Because we already see a breakout here. You can see this is a level. So this is a level, and this candle broke this level, right? And you can see after the breakout we can expect a retracement, but you are seeing a buyer's entry again after the breakout. You can see here again a buyer's entry. So it shows us the sellers are not interested after the breakout, so there is no sellers, and the buyers will continue after this candle here. So after the breakout we can expect the sellers, right? After this breaking of resistance we can expect the sellers, but there is no sellers. There is a buyer's candle with a new high. It means there is no sellers at this area, so we can go with the buyers. And I use this point and I place a higher option here, and you can see the buyers are entering in the market. Okay, so let me go to the next trade. Here I used marginal safety because I saw this one. You can see all the candle have rejection, and I saw here, you can see again the market is making big rejection like this. These two are same, right? You can see it is looking like each other. And here I use the marginal safety. I place my trade here on this level because I know it will have a rejection like this. So that's why I placed here a higher option with marginal safety. You can see I place my trade here. I didn't place my trade at the level because I want to use this rejection here. You can see this rejection. So that's why I place here a higher option. And you can see, okay, you can see here it reject, and you can see my entry was very safe here. So use these points in the market. Let me show you another example. And always okay, here, and always remember this: you don't have to place every candle. You can wait for a right opportunity and it will help you. Don't try to place each and every candlestick. It is not right. Wait for a right opportunity. And here you can see again I use that point. After the breakout we can expect the buyers, but there is a seller's candle with a new low. It means there is no buyers interested, and we can go with the sellers because the next level is here. You can see a rejection from this level, a reversal from this level, so the next level is here. So we have a big gap here, and I use this point. After the reversal we can expect the buyers, but there is no buyers. There is a sellers with a new low, so we can go with the sellers here. And you can see I place my trade directly. Okay, and it is a win also. Okay, and here let me show you. Okay, and here it is SNR strategy that we talk about it, a strong level, right? You can see here I saw a level. You can see the market is respecting this level so many times. So we are seeing so many reversal from this level, so it was a sign that the level is strong, right? We already know. And we are seeing a uptrend. If you see the market movement is this in uptrend, right? We know that. So here I saw there is a level, and here I saw a rejection here. You can see here there is a rejection, right, from the buyers. It means the buyers are interested at this area, and this is a strong level. We already see that. So the buyers will enter here, and I place my trade for a higher option. and you can see this is also a winning trade. And let me explain you about the bad market also. So as you can see, this is an example of a bad market. So what is the bad market signs and what we can do in bad market? The bad market have so many wicks, so many long wicks. You can see here the wicks are so long, and all the candle almost have a strong long wick candles. Okay, a strong wicks. And also another sign of bad market is wick candle. Here you can see so many spinning top and doji candle, so many wick candle. So these are the bad market sign. And what you can do in a bad market, you can avoid the bad market. Don't try to trade in a bad market. You cannot win because it not it don't have any proper movement, so you may easily lose your trade. Sometimes it is very fast, so you want to place your trade here with marginal safety, but the market moving fast. It is moving fast like this, so you cannot get a good entry. So it is very dangerous. Don't try to place your trades in a bad market. Always try to place in good market, and you will get good result easily in a good market. So please don't try to place your trade in a bad market. Always try to good market. The good market sign, it have good candle, okay, like this. It have good candle, you can see, with good body, not very long wicks, and the level are proper in a good market. You can see, you can easily tell this is a level, right? But here, but let me show you here. You can tell me where is the level here. See, there is no proper level, there is no proper body here. You can see here, this is very bad market. Here you can see there are so many level. So when you are seeing so many levels, so many reversal, this is also a bad market. You can see so many level. So these are not good market, and don't try to trade on this market. Find a good market, good candles, and with proper levels, then you can win easily your trade. And always follow that patterns that I told you. Let me repeat it again. Okay, so try to follow these patterns. The first one we talked was the double bottom pattern, W, right? The next was double top pattern, the M pattern, and the head and shoulder pattern. So this is the first shoulder, this is the head, and this is the second shoulder. It is head and shoulder pattern, and the uptrend pattern and downtrend pattern. So this pattern